If you had $10,000 to invest in crypto today, would you go all in on Bitcoin or roll a dice on a handful of AI tokens? I just launched an inquiry through ChatGPT and it's given me what it perceived to be that magical 10k crypto portfolio would look like. No surprises, maybe there's one or two that I kind of disagree, but let's go through what it's actually managed to spit out and then I'll give you my own personal take and opinion on it. So I've actually pulled all the token suggestions in descending order of percentage allocation suggestions from ChatGPT. So let's start off with the first one on the list. It's no surprise that Bitcoin is always going to be that top crypto token in everyone's portfolios. It made a suggestion on 40%. I kind of disagree. I would actually increase that to 50% as a minimum because it's a $2 trillion plus asset. It's rapidly becoming as a brand new digital gold. You are seeing a lot of rampant activity, a lot of bullish sentiments from different types of investors that are increasingly placing more fiat wealth into the Bitcoin. And I've created tons of videos on the evolution of Bitcoin as an asset class. For me, it's a leading digital commodity asset in order to preserve that wealth into the long term. So it acts as a long-term hedge. So 40% I would not agree with that. It would be a 50% allocation. Next is Ethereum. Ethereum is dubbed as the smart contracts king. So anything to do with the capability to build new dApps, more decentralized applications, you need to have smart contracts. Also, they're used to create stablecoins. I made a recent couple of videos revealing Tom Lee's prediction on the actual emergence of stablecoins ever since the Genius Act has been signed. That's going to really pour more capital into the digital realm. So who is going to be ultimately responsible for enabling the rest of the digital assets token creation? It's governed through smart contracts. And who is the current smart contract capability blockchain king? It's Ethereum. And given the recent bullish price appreciation, because it's always been going down, but ever since the approval of the Genius Act, it's suddenly become more of an appreciating crypto token because we all need smart contracts to build those dApps, to build those stable coins, and to build every other digital token there is in the blockchain world. So Ethereum and Solana are going to reign supreme. And why Solana is second to Ethereum? Because Ethereum, the major drawback for me, because I used to program blockchain development a few years ago. So once you program smart contracts and you deploy it in the Ethereum ecosystem, I found the transaction cost to be expensive. And Solana it's been born to not only provide a more lower fees alternative to Ethereum, but also it speeds up the transaction settlement, the actual runtime execution of smart contracts deployed on the Solana is more effective. And I actually added an extra attribute on Solana known as DePIN, is to do with blockchains and token rewards to decentralize infrastructure in the real world where individuals can contribute physical infrastructure resources across fields such as transport, energy, and wireless connectivity. And I think perhaps Solana has that added advantage of Ethereum. So between 25%, 10% allocation to each of those two perhaps would make sense, right? You really can't go wrong to allocate a proportionate amount of your wealth into each of these two leading smart contract capability blockchains. So one of these two is a must-have. The next one is Chainlink, decentralized Oracle. Again, when I used to be a blockchain developer, the actual shortfall of blockchains in general, they really lack real-world life data, real-world life value. So things like how you can draw in, let's say, the fiat exchange rates between the US dollar and the euro, it doesn't have that natively available in the blockchain. And similarly, when you think about investing in real estate property in the blockchain, well, it doesn't have the property prices. So Chainlink in this example acts as an Oracle feeder where it draws in the evaluation of the property prices. It draws that data into the smart contracts and into the blockchain. And similarly with any other real life data, currency exchanges, the credit scoring of individuals, all of that has to be fed through the Oracle. So for me, Chainlink has unique value proposition that every blockchain needs. And we're going to be seeing Chainlink embedded like an API in every type of dApp being built on the blockchain. So again, I would suggest allocate into Chainlink as well. As with Ethereum, they're the first pioneers in bringing these capability on chain. Arbitrum is like the Ethereum's leading layer 2 by total value locked. The value proposition behind Arbitrum, it really scales Ethereum more efficiently, and also it cuts down the exorbitant transaction fees on Ethereum as well. So in that sense, Arbitrum and Solana, there is kind of an overlap there in terms of lowering the transaction fees and high speed transaction. So Arbitrum competes with Solana on that basis. And Arbitrum, I've used Arbitrum as well. I've actually programmed in Arbitrum because of the low transaction fees and high speed transaction throughput. So Arbitrum perhaps is an interesting layer 2 in Ethereum that you ought to do your research. Render, I'm not too familiar with Render because the concept behind decentralized AI is a rather new one. We are seeing that dichotomy between blockchain and making AIs decentralized on chain, because AI companies, we all know that ChatGPT, we've got Google, we've got Meta, they all have their own AI models, but the problem with that is they're run by centralized companies. The idea behind decentralizing AI is to bring the AI model capability on chain, and also to help create additional payloads in the blockchain. So think about how we can set up, let's say, a scheduling on when we want to perform DCA and want to perform additional purchases of Bitcoin or Ethereum whenever there are dips in the values of those tokens in any moment in time. Well, you can easily set up autonomous AI agents to settle those transactions for you in line with that payment schedule that you've established. So there are tons of additional use cases as a result of this dichotomy between blockchain and AI. So this is going to be a huge upsurge in bringing blockchain into the mainstream, and equally AI, right? This is just another industrial use case that we are seeing. I'm not really familiar with Render, but this is what ChatGPT has managed to spit out. Again, you need to do your analysis. But let's move on to the next one on the list. Cosmos Atom. It says here is 5% allocation. That's their recommendation or suggestion. And what is the value proposition behind Cosmos? Is pioneering the Internet of Blockchain. Every blockchain, it's run in silos. There's a lack of interoperability or communication amongst them, which is another drawback. And this is why we're seeing a lot of bridging blockchains capabilities coming out. So they make a suggestion of Cosmos, but I'm familiar with Polkadot, which is, I think, is one of the first bridging blockchain capability. But then ever since then, there's been additional competitors. I think there are other Bitcoin layer 2 side chains that provide that similar bridging blockchain capability as well. So I'm not too sure about Cosmos, but there are tons of other bridging blockchain systems out there. Stablecoins, definitely. You need to put an allocation of your day-to-day expenses to cover your transactions on chain. When you want to send out stablecoins, let's say USDT Tether or even USDC Circle to another person at the other side of the world, and you want to avoid using Visa, MasterCard payments, which is 3% per transaction fee, too expensive, it's too cumbersome, too many middlemen, and it takes too many days for settlement. Stablecoins obliterates all of that. It's completely instantaneously settled on chain, and click of your thumbs, it's already settled. You need to have stablecoins in your wallet to cover, as I said, only for your day-to-day expenses. It's a medium exchange and is not to be confused as a store of value. For me, ultimately, it's Bitcoin and maybe some other real-world asset coin projects that I've listed out here. And then the last one that they've suggested from ChatGPT, and hasn't actually made any allocation recommendations, is really up to the individual, but you should always leave a very small percentage. Certainly the Gen Zs and millennials, they ought to perhaps allocate 1% in these speculative picks, these rapidly emerging coin projects that are high risk, right? Because it's just started out in its digital journey. And it's for those high reward seekers, in order to have that small exposure, as it says here, to early stage AI tokens or even real world assets like Ondo. And there's also Mantra. It's the first RWA coin project that has led to tokenization of real estate on the blockchain. So in general, this makes sense. Yeah, I totally agree. Perhaps the only thing I would question on Render, I would question on Cosmos, because there are other more pioneering blockchains that have started out on this journey and perhaps are slightly ahead of these two. But given this state of change and evolution, it actually happens in seconds, and it's very difficult to be on top of that rapidly emerging coin project because there are over 2,000 and there's an awful lot of noise out there, and that's what's confusing investors, right? So I agree with the list in general. The percentages, I would kind of argue, as I said, Bitcoin for me is 50% allocation, Ethereum, Solana 25-10. Okay, perhaps I would lower a little bit on Ethereum. Chainlink makes sense, and so on. Yeah, 3% for stablecoins is enough, right? You can equate stablecoins as your fiat in terms of cash in your bank account. So 3% is a reasonable amount just to cover those day-to-day expenses, right? And then lastly, I want to leave you an interesting resource that is called coinmarketcap.com. And you'll see this list, and it gives you the list of the top digital asset tokens, crypto tokens by market cap and volume, as well as the current prices. And if you click on any one of these tokens, it gives you the actual, it explains what it is, what is the value proposition, which is pretty much what I've discussed with you on the previous slide. So I would regularly check this list just to find out what is the emerging coin project, because as I said, this changes every second, and this is quite an exhaustive list. As you can see here, it goes all the way down, and you can see there's several pages, 95 pages. If we go to the last one, you see it's actually more than 2,000. It's actually 9,438 coin projects, and it's growing. But most of them are very new and hardly has any TVL or market cap, right? Very small amounts and highly volatile because it's a very small capital base that they've started out with. So they're always going to be susceptible to those massive drawdowns as well as upside in a short period of time, which is the biggest risk for me, particularly these new coin project that's coming out into the marketplace. So just a word of caution there. So that's all I'd like to leave you today. Incidentally, if you found this episode interesting, please don't forget the like button, to share the video to colleagues, friends and co-workers, and if you haven't done so already, to please subscribe to my channel, as I regularly publish some interesting videos such as these, anything to do with Bitcoin, blockchain technology and the future of finance. So till next time.